Hi everyone, my name is Gilbert Clark. I'm the Executive Chairman of Meridian Mining. We're developing the camp-scale copper gold project called Cabaçal in Mato Grosso in Brazil. We're a resource development project and we are very excited about 2022.
Gilbert, good to see you again. Saw you in December, live in London. That was quite nice. Where are you now? So you're either driving a lorry or you're in prison. Which is it? What have you got on there?
No, I'm in St. Jose Catamarcos, where our office is. Basically, we've got full PPE equipment when we're in site. It's a good chance I'll go out to the drill site today. Or I might have to cook dinner for the team tonight. It's 50-50.
Fantastic. Hey, look, I wanted to catch up with you. Like I said, we did see you in December, but you're on site, which is always nice to take advantage of the situation and see people when they're out there. What are you out there to try to do? I mean, why do they need you out there, and what do you need to get from that visit?
Well, we're coming up to our first 12-month anniversary of field operations. We've only started the field operations in March, and we've really grown the team and we've grown the project. So a couple of reasons, it's good to come out here, and I haven't not seen my CEO in 2.5 years. So got to see my CEO. So what we've achieved corporately in the last 2 years has been quite exceptional. At the same time, I wanted to catch up with my engineering guys because we're greatly advancing the concept of the open pit and the development of Cabaçal. But really, it's also just to get you, when you're in my role, it's not only about coming through and doing the corporate promotion, the corporate development financing, there's also making my hand on the pulse of the company. Speaking to my CEO, what's his concerns, what are his timelines for deliverables? So when I go to the greater investment community, they're saying, what are you going to do in 2022? What are your time frames and what are your milestones to achieve?
Yeah, well,
that's very much
okay. Well, so when we spoke in summer, you were just doing a raising, I think, at 70 cents. You're now over about 105. That's that sort of level. Say, whatever that is, 40 odd plus %. And every time that we've spoken, you continue to raise at increased prices, which is good. That's, as a shareholder, pretty much all I should care about. But I do want to talk about some of the operational things that you will be doing, some of the catalyst moments that I should be looking out for. I've of course seen various press releases around drill results, etc. But how are you piecing this together? Because I noticed that you've offloaded the tin that's been farmed out, right? So you're cleaning up shop. So what else are you doing?
Well, we announced we've expanded our drill program by another 15,000 meters. So this is because there's a couple of things there. We've got to still quantify our historical data for our QP, but also, we're still open to the northwest, we're still open to the southeast and the southwest. So what we've got to do, we're going to be expanding our drill program, infill drilling, and from that program, what we're targeting is June, July this year is to publish our first 43-101. At the same time, I've completed an internal scoping study. It's non-public. So that was quite a very reasonable document. We had that done by Senko. So once we've got our 43-101 first resource statement, is then begin the preparation to go straight into a PEA. And that we're actually doing the advanced preparation of what equipment we're going to need, what personnel we're going to need, when do we bring these people on, and what's the budget to do that. So it's not just we're a resource development company, we're a reasonable market cap, but now I've got to make sure what are going to be the achievements throughout the year to justify growing that equity valuation.
Right. Okay. And like I say, as a shareholder, which I am, I think most people know that. We can't complain, but we want a kind of sense of does the management's mind change as the drill results come through? Your copper and gold, obviously, we're not going to talk about the zinc and tin today. You're seeing what's going on out there in the marketplace. Obviously, precious metals came off a bit last year under a lot of pressure over the last 5-6 months. Copper, stories coming out of places like Chile. Is that an opportunity, or do things like that scare you being in South America? I mean, what are the conversations at the board at the moment?
what I like about being in Brazil, and this, I think the results we've achieved to date, is we have a very supportive, not only environmental legislation, corporate legislation, but mining legislation. And I can actually deploy my capital knowing that my shareholders are going to benefit from the full wealth that I create. So even though we're seeing, it's a really interesting question, and it's been posed to me many times, is Cabaçal a copper gold project? Or is it a gold copper project? Because the cash flow, when I look at the cash flow, the contribution to potential cash flows, it's depending on the commodity price, it's either 55% theoretical, 55% copper, 45% gold, or is it 45% copper and 55% gold? We are a natural hedge for the commodity cycles. Okay. And now when I look at the costs, what I think are projected costs for internal again, even if there's fluctuation in the pricing, we have a viable long-term project. We're not having to develop something at 1,000 meters. We're not having to develop something where there's no infrastructure. We are in a very fortunate location.
Right, but the point is that the drill bit is throwing up, equal amounts of gold and copper. You're not sort of, your decision making won't decide whether you become a copper company or a gold company at the moment. Just the way it's coming out of the ground, there's just a natural hedge depending on price. That's as simple as that.
Yeah, very much, Matt. And I think the processing that when we look at the metallurgy, great things. We look at the historical production data. So when I did the deal, the attraction was a deal that I had so much historical data that de-risked the project going forward. It doesn't really affect us. I think if you're a gold institutional investor who wants exposure to base metal or is your natural hedge, it's a very curious question, and I really all I can think how to respond is I think we'll have a long-term cash positive project. We have to then justify that by producing those technical reports that investors need to have in their hands, and that's what we have to do this year. Give those substantial reports so they can make a quantitative decision, and what we've been communicating to them the last 12 months is actually factually correct.
Okay, so the things I'm looking forward to for this year is obviously, resource. Let's get an idea of the scale as it sits today. I guess it won't be the last resource you produce. And the second thing is obviously you've been working on a scoping study last year to feed into a PEA this year, Q2 and Q4 respectively, for those things. So, has that changed? Will you extend that depending on what the drill results come back with?
The only thing that will impact that schedule is going to be if, like, we're seeing quite a nice extension in the Eastern Copper Zone, which is immediately to the southeast of the mine. I want to have that resource closed off. And then what we're seeing in Northwest Extension is the mineralization at the very northwest is trending now to the west. Now, do I continue to just follow it? So at a certain stage, we're going to have to say, right, that's the limit of a near surface resource, and we then calculate on it. That's what I see as the main impact on timing. We are engaging with a couple of engineering groups that we might be part, because the schedule that we see is quite active over the years to come, in the very short term. You want to make sure that you associate yourself with the correct engineering firm going forward. The quality of our data is, again, that's fundamental to any future project. You've got to make sure that any inputs you put into your project are of the highest level, because if you put bad inputs into a project, the outputs are bad. And in the last couple of weeks, we've seen some unfortunate where bad inputs have gone into a model, people have invested, and it hasn't actually worked, and you get negative outputs. So we've got to focus on the continual high qualities.
Absolutely, and this is what I want to get into with you in terms of the building blocks you put in place today and how you build on those. One of the things you're doing is you're picking up a bit more land, right? Two thoughts here is like, well, that's a sort of hedge for the future, blue sky, or it could delay the resource because you think that you can do something with that to make sure your first resource is of a certain size. So. Again, what was the idea there of picking up that property?
It's actually there's a little bit of thinking that I guess it's really, again, it's not what is junior caps typical junior cap management or board has the capacity to think of. So while we with the first purchase agreement for Cabaçal, it's over 4 or 5 years, it's about 8.75 million, and that was for approximately 16,000 hectares of ground that had 70,000 metres of drilling, geophysics, known historical resource, metallurgical projects, environmental impact. So we had to quantify, but there was an potential economic interest and mass of untenured ground. So we picked up another 15,000 hectares. So we went from having 35 kilometres of strike to approximately 55 kilometre strike belt. We went from having 35, now having 50 kilometres of that 55 kilometre belt. So what that means, and you can see it in our tenement map, there's a few small empty parcels, get perspective, but they're no longer what I consider the independent standalone viable assets. These are, we might need them in 20 or 30 years' time. So for me, they're a 20 or 30 year discount on any transaction requirement. I've taken away the ability for competing interests. And that's really important. And why a really good example of this is what we announced just this week, where we announced the potential for the St. Helena to be a satellite open pit operation. Now, the St. Helena might have the potential to be 3 or 4 million tonnes, best case scenario, quite high grade, reasonable grade, but it wouldn't have the independent economic mass to be a standalone asset. But when I integrate that into the potential larger scale Cabaçal operation as a small high grade feed, economically it will work. And that's what a VMS belt is. You have macro assets and smaller assets that feed into it. And this is what we've brought to the market now. This is really quite a key junction in the project the last couple of weeks, where we've secured all the economic upside of the belt, potential economic upside. And now by looking at St. Helena, you say, okay, that asset, typical junior asset, small tenement, high grade, by itself, uneconomical. Integrate that into a belt scale development, and all of a sudden you've got multiple feedings of high grade, either larger or smaller. And between St. Helena and the Cabaçal deposit, we've got a mine crawler that's some 8 kilometres between the two mines or thereabouts. We are seeing multiple upside now. Like we've just announced that one of the highest grade soil anomalies in my career, certainly 80 degrees, an 8 gram soil anomaly, that's part of a 3.5 kilometre geochemical anomaly that's only 2 kilometres to the southeast of the Cabaçal mine. This is what we're bringing to the market. We have a belt scale asset, predefined resource mineralized envelope that we're now making compliant, and the smaller satellite operations, they become economic now if the main Cabaçal deposit comes into line with production. So you're seeing a snowballing of valuation growth on assets. If you're a standalone, say you had one of these assets in Flin Flon, not going to work, it's not big enough. But now, integrate it into a larger production facility, belt scale development.
It's interesting, and these small moves that you're making. That's what I like observing and watching the way that you're kind of crafting this in a way. Is like, for instance, if I take the amendment to the Cabaçal option agreement, right, with the vendor. So I'm saying, shareholders looking in and going, well, we're happy. We're happy because things are moving up, right? You're doing things in the right way and creating value, not super stellar, hockey stick stuff, but nice, steady, accretive growth. The vendors too must have that view with you, because you're able to free up a lot of cash by renegotiating that option agreement. Do you want to tell us about that and why you felt you were able to?
We're really involved in the longer strategy, and what the announcement I think was last week. That journey to make that announcement actually commenced in July of last year, because we made an approach to the TSX, because we see ourselves as having a materially very positive asset of substance. And the Ventures Exchange is a good exchange, but it's a venture. And we'd like to grow our equity value on a stronger exchange. The main board of the TSX is a mature, stronger board. I think our liquidity will stay the same. We've had fantastic liquidity. I think we did 140 million shares last year with great growth on a very small portion of our issued capital. So what we needed to do, we had to have a budget for 18 months of cash on hand to meet the minimum requirements to develop the Cabaçal project. And one of the biggest blocks about cash was this 1.75 million US that we assigned for the first vendor payment. What we said, went to the vendors, we said, this is in the interest of because they've also got vendor shares, potential shares, common shares in Meridian. I said, this is really in your interest, because if I take away that or delay that payment until August 2023, that frees up capital to deploy into the project and allows them to meet the financial requirements to apply to the TSX to migrate onto the main board, because I've then got the cash on hand. Because it's not, when they look at, when the main board looks at you, they say, okay, what is your cash on hand? What's your budget? And we're not going to look at what your options, your warrants. We don't care if you're in the money. We want to know if you've got the cash on hand to be stable for 18 months. So we went to the vendors and said, look, this is in your interest. It's going to benefit your shares. You're on a stronger exchange, and we don't have to raise money to like today to have the cash, the necessary cash on hand to go to the main. So they said, yeah, we see the sense of this. This is in our.
But explain that to us, okay? So us poor family officers and retailers who don't know anything, where you go, look, I can free up some cash, go onto the main board. It's a stronger board, but you've got to believe that people, on that board are going to be interested in you, and therefore you may benefit from increased trading, and that's going to drive the share price, et cetera, et cetera. All that kind of goes up. Or stick it in the ground, keep coming up with good results, and see some share trading and liquidity and appreciation that way. So the money could have been spent in two different ways. You've gone a financial route. What? Just tell me the difference that you saw.
Well, the 1.75 wasn't actually going to go. It was actually it is a financial payment to the vendor. It does not go into the ground.
No, but my point is, hasn't that cash been freed up now?
Oh, it frees up the budget. So we now mean that with our 18-month budget, prior to, if we had actually included into that 1.75 million payment, which is due in the third, fourth quarter of this year, then that means I wouldn't have had 18 months of free cash flow to fund which is a requirement on the TSX to go onto the main board.
I know, sorry. So I'm trying to clear it up in my mind. Is like the point you've had a negotiation with the vendor and said, right, we'll defer payment with your permission to August 2023. That frees up some cash. I mean, your choice then was, what do I do with it? I know you walked in the discussions knowing what you wanted to do, but why did you decide the TSX route versus if I'm freeing up that cash, not stick it in the ground? What was that discussion?
There's a couple of things you have to look. Well, one of the first things, when you're attracting institutional clients to buy your equities and your securities, and I knew this from my own experience, there is a hesitation. There's a reason to say no. One can be liquidity, one can be market cap, and one can be what exchange you're on. So there is some funds out there, good strong funds, long-term sticky money. They're not going to put money onto the TSX feed. Now, one of the reasons why that is if you're a TSX feed company, you can have unlimited dilution in capital raisings. Meridian, actually, our board is very focused on equity management. We actually made a cognizant decision that we'd have an internal limit of never doing any capital raising above 20%. Now, when we go to the main board, you can never go up, do a capital raising that is above 15% dilution unless you go to an extraordinary general meeting. So it's a more secure board for institutional investors, and it's a more secure board for retail investors, because their ability for if you're on the TSXV, the ability for high dilution occurs on the TSXV by comparison to the main board.
Okay, so that says in terms of timing for next raise, because I know you raised, obviously, was it 10.4 last year, wasn't it, I think?
Yeah, we raised 10.4.
Yeah.
It was, that was a market to do. We had great support from Beacon Securities, CIBC, PI, and Cormac. That was really good. Again, that when we go, we're dependent on, of course, capital raisings. I think the next phase that we'll do will be some form of short form prospectus. That'll be in the future some stage, date to be determined. dependent on market conditions. But that's it. So when we did the first capital raising, it was at 7 cents, and it came with a half warrant and a 4-month hold on the securities. And then the next capital raising at 20 cents, first with a full warrant, second with a half warrant, again with a 4-month hold. And that's the 4-month hold is always, unless you're really long-term sticky money, it's a problem. And then the last one we did 70 cents without a warrant. So each time we've done a capital raising, higher price, less dilution, less and a more advanced and de-risked project. And that was the ability of Cabaçal to deliver those results, to demonstrate, guys, this is going to grow. My feeling, and I've discussed it with my bankers and guys, when we go to our next capital raising sometime in the future, I think we'll do it with a short form prospectus so that institutional investors who are, of course, equity managers have got tradable stock. That's great, and it's in a form. Generally, in these type of guys, if we attract the correct investors, they're going to hold their stock. We very, Matt, we've talked about this many times. Fundamentally, I'm an equity manager, and I keep very good control on my equity. Because if you lose control of the equity, you lose control of your ability to control the growth of the stock.
Right. We know what some of the targets are for this year. Resource PEA.
Yep.
Do you then bail out? How long are you and the team you've assembled hanging around?
If I was developing a copper porphyry, a big copper porphyry, I know straight away that the ability of a small cap junior to raise the equity component on a project build, your equity just gets wiped. Bang, forget about it. A lot of companies promote it really well, but the fact of the matter is, be it a 60% debt to equity raising or whatever, the equity work gets wiped out. We know this. The beauty of what we have here, and the numbers that I both calculated internally and the numbers that we've had from engineering firms, we know that the ability of the equity component for future project finance development is within the ability of small cap juniors. So, of course, we are a public company. We can be brought out. Overriding all my decisions is the purchase agreement for Cabaçal. I have to build that mine. So my focus is going through all the phases of de-risking to build the mine, because that's what I have to do, because that's the purchase agreement. And I have to do it in a manner that is of minimal dilution. My mind is to minimise the dilution of existing shareholders. That's fundamental. Timely capital raising, so we've got sufficient funds to deploy, and have the management team that prepared in advance and expanded. When I go to deploy the capital, it's in a cost-efficient, non-wasteful manner. And that's what we're doing. But when I look at the longer-term picture of these type of deposits, and I draw reference on comparable VMS camps, these are multi-decade producing assets. They are net-free, cash flow, open pit. They're fantastic assets to have. And the value on a large and mid-tier company to have an asset that they say, look, for the next 30, 40 years, hypothetically, this is going to be cash flow positive, and that is to have that come under our books when we're mining mature or declining assets. Transaction value on this is very interesting. Unfortunately, I know what that transaction value is.
I know. Given your history and your training, you should. And what I would like is to see you guys starting to give guidance as to how you go about creating a company or putting the company in the best possible position to benefit from a multi-decade mine. Let me just come back to now, though, which is the money you raised last year, your ambition to get on the TSX this year. Did you say this year, or is it?
Look, we've submitted our documentation. We have to sort of show that we have a maturely viable project and material project interest to the exchange. They're going to make their own independent assessments. It would be a fantastic scenario if we are on the main board by end of March. They might fast track us. It's entirely up to them. But we work to their regulations, their time zones.
Potentially first half. Okay. Fine. So, and given the constraints for that, does that leave much capital available to actually move things along on the ground? Because you got to get that balance right. Okay. So, what are those things that we're looking towards apart from resource and PEA?
We came into the start of the year. We had about 11.25 million Canadian. We had an additional 3.8 million Canadian coming. We couldn't actually budget it, but we've got warrants that are, depending on what warrants they are, they're either 10 or 5 times in the or 3.5 times in the money, and that brings in an additional 3.8 million Canadian. So that takes us up to nearly $15 million Canadian. So we're pretty well financed. Where we deploy our money very carefully. We don't just we don't deploy our investors' money, and it's my money too, because I've written a check in every raising, as has the board. We're very well funded, Matty. I'm pretty comfortable about it. We'll always judge the market conditions, the interest. If we see an attractive investor that we think will be really supportive of the long term, I think always take in context what their requirements are. And we've had fantastic support from our existing institutional investors. I have a lot of dialogue with them to say, what's your expectations? And be it an investor that has 10,000 shares, a small investor, I take their phone calls and I address their concerns. We had a couple of exchanges this week about in February, had a lot of frequency of news releases, and that was just circumstances. It wasn't intended. There was a couple of statutory announcements I had to do. There were a couple of things corporately that had to be announced, so we had to put them out. But I think going forward this year, just on communication and achieving these milestones, my expectation is we'll reduce the amount of frequency of news releases, maybe 1 or 2 a month, unless it's a material update. And each quarter there'll be a very good MD&A. But the financial situation of the company is very strong. Okay.
Look, Gilbert, I'll leave you to crack on because I know, like I say, you're on site, got things to do, people to see, etc. Great update. We'll see you soon. Keep doing what you're doing, please.
Yeah, no problem. Thanks for your time, mate. It's great to be on the show again.